Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Tonight's topic is fear and loathing in Chicago. And so what we're going to use is this topic to discuss one of the main topics tonight, of course, is going to be fear of trade entry, addressing fear of trade entry. And with that being said, let's get over to screen one and ask the question of the team tonight. How many of you feel at least some fear when you get ready to take a trade? Now, when I say some fear, I'm talking about, there's different levels of fear, right? There's complete trepidation where you're on the verge of, just getting locked up because you're just so afraid to do it, versus just sort of a mild fear. Now, while you're typing in your answers in the fear question in regards to trade entry, and if you're just coming in, I see many of you just coming in. Stephen, Roger, Philip, a couple of you. Don't worry, we're just getting started. You haven't missed anything. While you're answering that question, I see a good entries coming in. I do have a follow-up question. How many of you did what we discussed last Thursday night and Saturday morning? And if your answer is yes, I did it, I think the bigger question is, did it help you? Now, some of you might not know what I'm talking about, and that's okay. I'll explain in a few minutes. But for those of you who did you do what we suggested from last Thursday and on Saturday morning this week? And the bigger question, of course, is if your answer is yes, did it help you? Wow, okay, good news. Hey, CG, don't worry, we're just getting started. You haven't missed anything. Michael said, I did. Good. Chris said, I did it, and it helps. Yes, I did it, and it definitely helped me, said Peter. And Brent said, yes, I did it, and it helped me better focus on my instruments. Weldon said, I didn't do exactly as you suggested, but I did sort of a form of it, and it did help a bit. Good. David D said, I've been working on trying to trade with the new object trader. Okay, good. Roger said, I did do what you suggested, and it turned out that I am the best at YM and NASDAQ. Well, that's most excellent. For those of you that might not know what I'm talking about, let me quickly explain. What we did is we went into our control panel. Let me just take 2 seconds to recap this for those of you who may have missed this or might not be quite on board with it. Give me 1 second. I'll just quickly do a 2-second recap so that everybody's on board with what we're talking about, because you might be saying, well, what the heck is he talking about? Just give me 1 second, please. Bring up the control panel. Okay, I'll just, for those of you that already know this, just bear with me for a second here, please. All right, so what you want to do is you want to go into your control panel, you want to go into options, and you want to go into simulator tab, you want to go into accounts, and you want to create separate sim account names for each instrument that you trade. Whatever it is, 6A, 6B, NQ, it doesn't matter. You go in, okay, let's say I want to track NQ separately. So you can name it manual NQ, you can name it something, whatever. Give it a name. Once you save it, now I already have an NQ, it already exists. But if you don't have it, you're going to get a note here that says that this account will be in effect next time you log in. So what that means is that you have to physically log out and then log back in, and then this little sim account will be available to you. So then when you go use Object Trader or whatever you're using to trade, You take all your NASDAQ trades and you log it to that little SIM account with an NQ account. Because right now, if you're trading SIM 101, all your trades are getting dumped into that one SIM 101 account. There's no way to go back in later and look at all these accounts, or any account for that matter, because everything's getting dumped in SIM 101. So if somebody came up and said, hey, how you doing on YM? Is that thing making you any money? You might say, you probably say, well, I think so. I don't know. I mean, I think I am. It seems like every day I do pretty good. Well, when you create these separate accounts and you track them here, you know, I think I have YM in there. I think YM's already in there too. Let's double check. Yeah. So what happens is that each of those trades, so every day, every 2 days, every week, if you log them separately into here, over time, you'll see how you're really doing on every instrument. And so I've seen here there's been about a dozen people or so who've taken advantage of this very thing. And within a week, like for instance, maybe you thought you were doing really good at crude, but you weren't tracking it real well. Just as an example, right? Crude, whatever. And you put CL in here. I think CL is already in here. Let me check that too. Yeah, it's already in there. Yeah, and then you get done, you trade, you know, you up, down, up a little bit, down a little bit, you're trading, you're doing okay, you think you're doing, you go in at the end of the week and you're down 280 bucks. Well, then and then you did the same thing with, say, the Russell. Say you had 3 different separate accounts and you set them all up and you think you're doing good on all 3, and I'm just making numbers up, just to explain the purpose of why you're doing this. And you get to the end of the week and I'll be darned, you're down almost 300 bucks on crude, but the Russell is up 360. And it turns out that YM was flat. You know, I don't know, maybe you're down 10 bucks or you're up 100 or something. You know, you find it. So what does, after that exercise, what does that tell you? If you track all these separately for a week and you get results on each one, what is that telling? What is that telling us to do? Why would we track it separately? What are we trying to find out in our trading? Why will we do that? Why have all the people in here done that? So out of all the instruments you're trading, you can figure out which ones you're good at. And then would it make sense for the ones that you made money that week, for those ones that you made good money, to go ahead and focus more on them to make more money? To find the instrument you do very well with, Kenneth, that's the whole purpose of this exercise. So this is the 3rd time I've suggested doing it. I'm not going to bring up again. If you want to do it, I can tell you countless people have done this, and it really helps them focus, because instrument selection is critical and key to your success. I've said that a million times. All right, enough of that. Let's get back over here to talking about trade entries and fear of getting into trades. And I noticed there were a lot of comments when I questioned this. Anywhere from, I have fear of entry, I'm getting better, I fear the entries, and I loathe them because they're hitting all my stops. This is feedback from the team. Especially when I'm doing badly, I fear the entries. There's always some fear on my trade entry, says John S. A little bit, says Weldon. Now here's an interesting comment from Hardy. Hardy says, I don't have any problem pulling the trigger, but I have to learn how to take the heat better. Heat being when markets pull against you and you're upside down when you jump in. Kenneth says, I always feel some fear of the ricochet back right into my face. Okay, so here's how we're going to address this. There are times in the market where markets are moving. There are times when they are behaving themselves, and there are times when they aren't. Now let's look at NASDAQ right now. Okay? Let's take, this is NASI right now, in real time. Going back to the close. Now let me tell you where the close is of the market. 1 o'clock Pacific. I'm here in California, so somewhere about right in here. You can see there was sort of a tiny little shotgun of some bars going right into the close on Nazaru here. More or less right in this area here was the close of the market. Let me expand this out a little bit here. Now, since the close of the market here, after the close, I see 3 good trade entries. So what I'm going to take, about 30, 40 seconds and have everybody in here tell the team where you see, you should at least see one, but hopefully you'll see all 3. And you can type in a time where you see the trade set up or a level where you see the trade set up. Level being like a number, like 61.25. So let's come over here. This won't apply. Maybe I'm just make something up. I'll say, okay, I see a long at 12.58. I saw a long at 12.55, and I see a short at whatever 12.59. Okay, that's how you would do it. So where are the 3 trades that set up on NASDAQ after the close? So I'm talking about this plate from this point forward in terms of what time they set up and or what level they set up. And you can go so far as to say what the trade entry would be, short or long. But I see 3 trades. I see 3 trades on this chart. And after I'm going to put 30 seconds on the clock for you to put your trade calls in, starting right now. Please take a minute, observe this chart, and see if you see the trades that we all do. We're going to sort of collectively as a team call these trades out together. "22 seconds. Where are the 3 trades after the close on NASI?" "15 seconds. 10 seconds. Try to participate if you can. The whole reason we do these interactive webinars like this is because I really want everybody to work together to see trades. It's going to be much better for you tomorrow and next week as we trade live in the live room as a team, that you see these trades set up, right? All right, 5 seconds and the time is up. I see good answers from everybody across the board. Hardy, CG, Adam, Douglas, Michael, Maurizio, ciao bella, my friend. I didn't see you come in. Welcome. Peter, Weldon, I see 3 trades from Roger. Hardy, Kenneth M, those look good. Time's up. All right. Now, so we had a situation here right after the close, and I would say the first trade set up at the mid-band was right in here, more or less, right in here. We had a nice little consolidation patch around the mid-band here, which, truth be told, given the vagueness of the background, that you could have allowed to go either way, right? You could see that there was a swing down here, and it's quite possible you could have got a scalp down that way, right? And you could have let it go the other way. And so if you, depending on how you drew your box, you would have been filled long probably on this bar right here. So if time-wise you called anything between, say, 13.13 and 13.30 as a long trade, or level-wise you're looking at about 54-ish, then you were correct. That was trade number 1 set up long. As you can see, that turned out to be a pretty nice trade. You got a nice, you definitely hit the first swing for your scalp, and you got a nice little runner coming out of it too, right here. Of course, everybody sees the runner took off and went all the way up here. Now, I'm not going to talk about trade 2 and trade 3 just yet, because here's where I'm going with this, is how do we address the fear issue? Because when we talk about fear of trade entry, what are we really talking about? Fear of what? When we say fear, fear is a pretty broad term. You can be afraid of lots of things. Lots of people, I'm afraid of getting in a car accident. Yeah, getting hit by lightning, getting run over by a bus. You can be afraid of a lot of things, but what are you afraid of when you pull the trigger on a trade? What is that fear based in? Fear of loss. That's right. Fear of loss, of losing money. And we all, when we pull the trigger and we see trades, or maybe we're still struggling to see the trade, but either way, when you put this box on here and you were filled long on this bar, sure, if you used OT and you had a 12, the default is a 12 tick stop, so you go 12 ticks below here. I don't know, I'm guessing this initial stop would be down here somewhere probably. 12 ticks below your fill right here. And the market popped up here like this. Here was your initial pop. Maybe it got to your scalp target, maybe it didn't, depending on how close your scalp target was. My question to alleviate some of your fear is this. What are you going to do with this initial stop after the market pops up into here? Do you have to leave it down here? Does it just have to sit down here? And the reason I'm asking you that is because I know what some of the fear you're feeling is that when you get this pop and you get that euphoric feeling that, hey, I did the right thing and I'm in the money. Let me get some of this stuff off of here so you're not confused about what I'm talking about. Let me, hold on, stand one second, please. I'm trying to get some of these arrows off of here. Take that off. This didn't happen. Take that off. So I'm talking about this trade entry right here and the initial 2-3 bar pop up. We all get that good feeling. All traders do. Hey, I made a good call, right? I'm in the money. I'm not feeling heat. But in the backs of our minds, as these bars start to form, what are we still thinking? Come on, you know what I'm talking about. What is still going through the back of our minds as this trade is unfolding? You're long, your initial stop is here. Maybe you have a scalp target here and it's not hit it yet. Yeah, sure, I know. I feel it. Every trader would be lying if you don't admit what you feel about this. It's going to give it all back. It's going to come take your stop out and you're going to get a loss and you're going to feel bad about it. There it goes again, that stupid market. It knows when I get in, it knows where my stops are, and it always comes and gets them, and it's going to do it again. I feel good because I'm up 4 ticks, 5, 6 ticks, whatever this is here, depending on your fill, right? It's not getting to my scalp. I'm going to take another loss. Dang it. But yeah, some of you have already typed in, drag up your stop. Now here, I would not necessarily put it right at break even, okay? I would not do that because how many times have you seen where a market will bip up like this, right? Not quite get to the swing. Maybe, like I said, maybe put 2 on, maybe it didn't get your scalp off yet, and it comes back and it just wicks right down right near where you got in and almost gets it. So the way you avoid that is you don't leave the 12 ticker wave down here, right? You don't leave the 12 ticker. I wouldn't put it right at the entry. I would fade it, you know, I'd give it a couple of 3, 4 ticks. So now, if it did bit back in your face, how much do you stand to lose in this scenario right here? I dragged it up just under the midband on that entry. So let's look at some quick numbers here. So you're filled at 55.50, and maybe you're at 50, 54, maybe right here under the midband there, 54.25. Yeah, a couple of 3, 4, 5 ticks. You might lose 20 bucks. If you have one contract on, you lose 20 bucks. So what I'm trying to tell you is that if you play a more active role in trade management, I know, and I talked about this last week, last Saturday morning and last Thursday. So if you listen to those recordings, I go a little bit more into depth on this. But you have to play an active role. We can't too many times. How do we do this, right? How do we do this? You got the 12 ticker down here. You got your target. You know, you got a 10 tick target up here. Whatever. I'm just hypothetically making how a trade could play out here. And then we do what? We take the lazy trader way out. Well, you know what? OT's got everything set. It's going to pop up and get me, or it's going to come down and it's going to stop out. And you take the lazy trader approach, or you could be a little more proactive about it and say, you know what? Okay, I didn't get my target. I'm up 6 ticks, whatever. I'm going to go ahead. I'm not going to let this thing come bite me again. I'm not. I'm going to get active about managing this, and I'm going to come up here. And you know what? If it comes down and takes the mid-band out, I'm out of it. Now, you heard that several times in the room, even this morning, right? Remember we got in some of those trades? I remember one. I think it was Weimer or NASDAQ popped up, and it was up like 2 bars had gone up. And I said, I'm not giving this thing any wiggle room. If it closes below 01, I think it was like 601 on Weimer, I'm out of it. So you can take that approach. Now, granted, if you got a choppy market that's going all over the place, you might take a lot of little hits, little teeny hits like this. But in the end, eventually, you're going to catch a runner. And it's going to more than make up for it. Everybody understand that? That's what you got to do. Some of the best traders in the world put little probe trades on all the time. Little winners, little losers, little teeny testing type trades. And sure, some of them get stopped out, some of them don't, some make money, but eventually you score a decent runner. Now, let's go over here. We had a nice retrace back to the mid-band on, looks to be, if your second trade call was long at 1600 at approximately the 62 level. If you called out a long bounce there, you are correct. That was the second long entry. Now this was even better because you could have seen ahead of time. There's a couple of good ways to get in this particular trade. You could obviously box it, but using the Ray tool, the new Ray tool on OT would have been probably a better way to do it. Either way, you're filled long more or less on this bar right here. All right, so you're filled long right there. Whether it's a Ray or a box, even a bar close would have got you in there. Well, the bar close probably would have got you in right here, but that's pretty aggressive. And the reason I'm saying that is that if you do the bar close, and we've discussed this before, if you do the bar close on the mid band and you get in, say, on the close of this bar up, like if you turned it on right here, bar close up long in OT, and you got filled on this bar right here. Now, it's quite possible, and this is where some of you might feel fear and trepidation, is if you're using that bar close feature, and then the bars chop around here for a while, and they go lower. See, here you got a quick bip up, got filled, and you felt a little bit of heat on these 2 bars right here, right? Not much. A little bit. Now notice, I want to point this out as we're having this discussion, and I'm going to blow this up real good so we can get in real detail about it. Can everybody see the difference between the bars that followed the entry here, and I'm talking specifically about these bars right here, these bars right in here, versus the fill here and these bars right here? Yeah. With this trade right here, you immediately started to feel heat, right? Whereas this trade here, even though it pulled back slightly, it never broke your entry point, and you never felt any heat. These bars right here might have come within a tick or two of your entry. If you're filled long on this bar, your fill is right here. So even though these are wiggling around, they're not challenging your entry. You're always in the green on this trade. So would it be fair to say that you have a much higher comfort level with a trade that goes like this as opposed to a trade that starts off like this, right? And this initial stop would be 12 ticks below 63 1/4, so you're looking at, you know, way down here. I mean, is that a fair statement? When you pop into a trade, part of the fear is your sort of initial reaction as to how the market moves after you're filled, right? In the scenario where you don't feel any heat, you get a little pullback and it takes off and fills all your targets, life is good. Not much fear, if any, even though you were active in managing your stop to get it up here to mitigate any damage. In the event that it did break down, you wouldn't take a full 12-tick hit. You only take a couple of tick hit. You lick your wounds and on you go. It's a little more tough over here because as soon as you're filled, it pulls immediately against you. Now, how do we manage this trade over here in regards to our stop versus this one right over here? Well, yeah, we know what we did over here. We dragged it up. Let me ask the question a different way. Is it appropriate to drag the stop up right now with these bars pulling it back at this point? Should you go ahead and pull this stop up to mitigate losses, yes or no? Or leave it where it is? What do you do when you're feeling heat now? And you're feeling a little sweaty palms. Yeah, sure, you're nervous. Maybe it's a live trade and you don't want to get a pop. Maybe you came off of a loss and you don't want to see a second one, right? Leave it, Roger says. Wait for the scalp target, then move it up. Good. Have discipline, Hardy. Good. Take off some of the trade, leave it where it is for the first target. Good. Good. So this is where the patience comes in, and feeling a little bit of heat and dealing with it and not panicking when it pulls back against you a couple of 4 or 5 ticks. Don't start freaking out that you're going to take another pop and get all freaky and drag this thing way up here. You know, maybe you suck it up real tight and that stops out on that bar, and then you get a trade that comes up here. You go get a trade. Gives you a scalp trade. So what we're talking about here is a little bit of art and a little bit of science, right? It's sort of a combination of experience and getting a feel for it, not getting all panicky when you feel a little bit of heat. Bottom line is this: it's gonna be two things. Okay, let me just type this in so we can all get this right on the table. Okay, maybe 3 things. Okay, the first one is you're gonna have to build, and this goes without saying, we've said it 100 times before, you've got to build that confidence level up. And when I say confidence, I'm not talking about to the point where you're, you know, sort of cocky about it, like, oh, I can take any trade anywhere, I don't care, whatever, bring it on. No, that's not what we're talking about. We're talking about a mild confidence where you know whatever's going to happen, it's going to be okay. That's having good confidence. That's a good moderate level of confidence. Not overly confident and not having any confidence at all, right? Let's just type in moderate. Moderate level of confidence. You got to get to that point. And that comes from what? A good win rate, a good success rate, a good feeling about your trading, that you're going in the right direction and tracking the instruments and knowing that, hey, you know, I've developed a pretty good track record on this instrument. I feel pretty good about what I'm doing. I'm going to be less nervous and scared about pulling the trigger. And this next one is really important. I'm not going to say patience. Patience is an overused word. I'm going to say this. I'm going to say you have to be okay with a full stop out. I mean, in all fairness, I think it's true that if you're not okay with a full stop out, in other words, what I'm saying is that you got filled on this long trade right here. The fear is kicking in because it's pulling against you. You're feeling the heat. You're fearful that it's going to come all the way down here and get a 12-tick full stop out. You have to be okay with that. If you're feeling fear that, you know, 10 or 12 ticks on this instrument is going to kill you, well, then maybe you shouldn't be trading that instrument. That's what I'm saying explicitly, just to be clear about that. You have to be okay with a full stop out. Now, the other thing you can do, if you want to mitigate some risk, is you can cut the stop in half. I wouldn't take it all the way up to the entry because of this reason right here, the 2-3 bar pullback where you feel some heat, but you could make the case that you could take it to a couple ticks behind the mid-band. In other words, what you're saying here is that, you know what, if it takes that support level out, I probably should be out of it anyway. Yeah, Hardy says a full stop out should be part of the trading plan. In other words, you should be able to accept that because it's going to happen once in a while. You have to know that, right? It's like any business. Trading is just like any business, right? It's a business. How many businesses do you know in the world, in the country, that make money all the time and never have losses? How many businesses are like that? No losses, ever. Every decision they make is always perfect and right, and they make money all the time. I mean, is that realistic? No, of course. Of course not. All businesses, everybody, we're human. People make mistakes, right? It's no different with trading. Let me move on. Here comes trade number 3. Bounces off the mid-band, and we get an entry right here. If you use the ray tool, if you use the box, whatever tools of entry you chose at this mid-band bounce, you both would have been filled long on this bar right here. Now, let me ask us, I'm going to quickly go through this trade and then move on. On this trade right here, when you drew the ray and you enabled the box, and this trade right here, the question is applicable to both. Would you be going long only, short only, or let it trade both? So L, S, or B. I'll give you 10 seconds. This trade right here, when you boxed it in or you drew your ray. You're getting ready to take a trade. L, long only, S, short only, B, let the box take both sides. 5 seconds left. Type in a letter. What's your vote? Cast your vote. L, long only, S, short only, B, both sides of the box. Time's up. Ooh, interesting mix. I didn't expect that. Now, the predominant answer for almost everybody is L, which is long only. There are a couple of B's in here from Kenneth and Chris, and let's see if there's any other B's, and one more from Mary. For me personally, in my interpretation of this, is definitely long only. Here's why. Well, for a number of factors. Of course, you can see we have the green background. The market is stair-stepping up. It's moving in an upward direction. You're getting support at the mid-band. You know, the market wants to go up. And the argument on the both sides, so just to back up, long only is the correct answer. S, short only, was the wrong answer. And both, you would probably be trying to make the case that, well, you know what, Charles, you really don't know at this point. It could break down and start heading the other way. But my counter to this argument of the both is that it's also quite possible that a bar could close down just below the mid-band. Oh, wrong thing. Hold on a second. Yeah, the bar could close down just below the mid-band, getting you short, right? You're filled short on the both box, and your 12-tick stop is way the heck up here, and then it reverses and does this. So not only did you take a pop on the short side because it was the wrong direction to get filled in, unless you had reverse on, then you would have missed the huge trade, so you got double whammied. Huge trade. Still going, I think. No, it's pulling back. All right, okay, so let's extend this quiz, and then we'll move on to another instrument. I think we're making good progress here. I'm going to take a quick, cast your vote on the team. Box the market right here. In fact, do I have OT on here? Hold on, maybe I have. Let me turn OT on. Stand by. I think I do. Give me 1 second, please. Let me see if I can do something here real quick. Yeah. Yeah. Okay. Let me see if I can activate it real quick. No, it's on NQ. Yeah. Okay, that's all right. All right. Just to be clear. Okay, this is pure simulation trading. This is green because I have it logged to the sim account of NQ, and I wanted to say that. This is green, but I have it logged to the sim account of NQ. I am not live, just to be clear. And everything I'm showing here is strictly educational. I'm not trying to take a trade. I'm not trying to take a trade here. But I will put a box on here depending on how the team votes. Should I box it right now, yes or no, or W for wait? So what I'm saying is I've got region selected here on OT. We've got these bars forming on a pullback. Everybody sees that. We're in the midst of a retracement. It's pulling back. Mid-band's right here. There's two predictors sitting right there too, right? Box it right now with a region box. Insert, activate, yes or no, or W for wait. Cast your vote. 10 seconds on the clock. It's retracing. Better get in. I better get that box set up. We're going to miss it. We're going to miss a bounce, and things going to run 100 ticks, and we're going to miss a huge trade. What do you think? Ooh. Look at that. I'll be a son of a gun. Every single one of you voted to wait. Good. Look at that. Okay. All right. Good. Good, good, good. And I know I'm going to ask the question, but okay. All right. I know most of you are waiting to see if it'll get all the way down to here, right? Clearly there is some support down in this area right here. So we're expecting a bounce, yes? Good group vote, Eddie. Everybody said wait. Perfect. You know, just for the heck of it, I'll tell you what I'm going to do. I'm going to go ahead and put a box on here, and I'm going to activate it, but it's going to have to close above. So now we want long only, right? Long enable, short disable, reverse disable, long only. And you know what? Let's just go for a 5 ticker. What do you think? Right? There we go. Now, if we get filled on this NQ sim account in a sim trade, if we are filled, it could be a quick scalp. I'm only going for 5 ticks, Hardy. Yeah, and so 5 ticks, if it closes up here, it would be filled around somewhere between 371 and 71.50. See the close? It would close here. And our initial stop is set for 12 ticks, so that would be way down in here somewhere. And our 5 tick target. I'm just gonna sort of simulate how this might work. And if it comes more towards the mid-band, we will rebox it. No, Brian, I've said it 3 times. I just want to be crystal clear about this. It's green, but it's not live because I am using the NQ sim account. So that's one thing. Now listen, I'm just going to say this. If using the sub accounts for the purpose of tracking your performance on the various instruments, when you use Object Trader, it will be green, but you will be in sim. If you find that confusing, then don't do it. Okay, just to be clear about that. All right? I assure you that this is not live. It is in the NQ sub account, the sim account. But this is what you're going to get. So by all means, if you find that setting that sim account up and it's green is freaking you out and you're thinking you're live, then don't do it. Okay? Yeah, just don't do it. But, you know, if you can realize, you can think for a second, yeah, I remember I selected NQ. The other thing you can do is right-click, go back to it, and turn it off and turn it back on. Okay, you can always do that. It takes a second to do. It's no big deal. So in this case here, we boxed in Nazi. This candle right here got close to the mid-band, but not quite, and we're looking for a fill long. Hold on one second, please. My apologies. I still have a little bit of allergies here. So we got a lot of pollen in the spring here in California. All these trees are blooming, and there's pollen flying everywhere. It was worse a couple of weeks, you know, over the last week or so, but it's getting better. It's getting better. All right, it's about to close. There we go. We're filled long. Here's our 5 tick target right here. We just got filled. And where's our stop? Let me get this box out of the way here. This box is confusing things. All right, let's manage this trade all together as a team. The trend line would have been breaking long too. Yeah. Now it's quite possible. Just going back to address this is if you had the ray on, like that, then it's quite possible you would have been already filled long on this bar right here. And depending on where you activated it, so that's the ray trade, and if you had bar close on, depending on where you activated it, you would have been filled long on this bar here, or quite possibly that bar there, depending on when you turn bar close on. Everybody understands the difference of how that's working there, right? Region is we draw the region box, and when it closes up, it fills us long, or closes down, fills us short. In this particular case, we're taking long trades only. We're going for a scalp trade. We have a 5-tick target, and we have a 12-tick initial stop that's sitting right now down here. Now, let me pull the team quickly. 10-sec question, pop quiz. Should we move the stop now, yes or no? Yeah, we're taking a little heat. It's 1 or 2 ticks. This is no heat. So this bar has filled us long, and it's flirting with our entry. So we're going up a tick, down a tick. No big deal. So my question is this: should we go ahead and drag the stop up to here, or even here? What do you say, you team? Move the stop, initial stop, yes or no? Ooh, mixed answer. Now the prevailing vote of the team is no across the board. However, we have a couple of comments from Hardy, Adam, and Kenneth and Weldon to move it to lightning and move it 2 ticks. Michael is saying we're not feeling too much heat. It's easy to say just let it stay. But some of you have voted to move it up 2 ticks, which means that it would go up to 12, 10. That's 11. 10 would put it right at the bottom of that bar. It's trying to pop up. We got a scalper here, 5 ticks. Notice how this scalper is fading this top by 6 ticks here. So now would it be fair to say, if you were in this trade live with real money, would you be feeling fearful, feeling comfortable? You shouldn't be feeling fear and trepidation right now. I mean, it's right close to your entry. We only get nervous when we start pulling back against, like if this bar closed down and started coming against us, we start feeling a little bit nervous, right? You want to see what the Nikkei's doing? Yeah, this is kind of slow. Tell you what, we got a little bit of time here. Well, I could find. Let me see if we can find another trade here. Let me pull up. Let me get 6J up here. You want to see if 6J is moving? This thing's just dead. I thought we'd get some follow through on it. With all that movement we got right at the close, I thought we'd get some more movement here, but it's kind of gone to sleep. At least we get to talk about, watch something on a chart. Let's get 6J up here before we run out of time. See if we can get another trade up on the table for us here. Come on, Ezzy. Pop it up, buddy. You can do it. 6J's bouncing off the midband, moving down. It's loading on another screen. Give me a second here. I'll tuck this one in the corner. We'll keep an eye on Nazi. And we will see what old 6J is up to here. Hopefully the data doesn't crash me down. Oh, yeah. Oh, yeah, you had a monster short. Look at that. Stand by a second, please. Let me pull this over. Keep an eye on this Nazi trade, which is absolutely going nowhere right now, unfortunately. Thought we'd get at least some kind of follow through the upside. Maybe it'll start moving for us. We'll see. All right, let's get 6J down here. Should have been watching 6J. Look at this. Look at this chart. What kind of trade just set up on 6J while we were yucking it up here? How many of you want to take it down here? I could bring up OT. We'll just short it right here. I think it's tanking. What do you think? Should we get in? Better short it here. We're going to miss the rest of the run, right? What do you think? I get OT up, market short right here. No, suicide. What are you thinking? Only with a really tight stop, says Adam. No, thank you. I'm not taking that one. You take it on your thing. I'm going long, says Greg. Wait for the retrace. All right, so here. This is a good chance to ask a question on this. All right, I want to talk about the. Of course, we're not shorting. Everybody knows, right? We're in the thrust part of the move. The short setup was up here, right? Everybody sees that, right? Short setup was right here. Now, let me ask you this question. I know this is an issue on everybody's mind who trades these markets, right? Here we had a thrust. We checked the midband and rolled. We had a retracement, and it's quite possible we could have boxed 6J right here. Now, do you get nervous when a market goes higher and you're trying to get short? Look at 6J drop. Holy cow, that would have been actually a pretty good trade entry, huh? Of course, you never know. That would have been a good trade entry. You'd be up right now. I think what we're talking about right in here, right? Dropping like a stone. Well, let me answer that question, okay? Because here, if you had drawn the box like this and it goes higher, oh, it's going to go up and get our target. All right, who wants to move the Nazi target? Yes or no? Real quick. Move it up here? Yes? No? Leave it where it is. Nazi target. Up? Yes? Leave it where it is a no. Ooh, what a mix. No, 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 no. Yes, move it up from David D. Leave it where it is. All right, we'll leave the scalper where it is. How about moving the stop? Anybody want to move the stop? Yes? Where to? Right here? Bam! Got it. That's how it's done. You're out. And as I was moving the stop, it took it. There you go. So here's a little judgment thing. It's good that this happened because this is a good thing to talk about. Okay, in the after-hour sessions like this, a lot of times you won't get the follow-through that you would normally get in an active trading session like the morning. So for instance, here where we got long, we're expecting it to get here, and it might come up and blow right through it. It's quite possible, but there's nothing wrong. Now, if we put two lot on, and it popped to 6. It filled 6. It says 5, but I actually drug it to 6. That's why we're up $35. Filled at 7. And we still had to stop on a second contract runner. Yeah, no question. Take it right to break even. And then if it takes this top out, if you get follow through to the upside right here, and you get a runner on your hands, yeah, then we'll get much more aggressive about our trailing stop, right? Much more aggressive. But for right now, I'd set it. We didn't do two contracts, but if we did, break even. Everybody following that? All right, let's go back up over here to 6J before we wrap. In the case of this short right here, this short box, you never got filled short. Okay, so we don't have to be nervous about this. It never closed below the box. That's what I'm trying to say. It never closed below the box. So even though you see it's going higher, what can you do? You have two choices here. You originally drawn the box right here. What can you do if it goes higher? Two things, right? You can just leave the box you have, and it will simply extend out in the future until you turn it off, right? Could you rebox it up here as that is forming? What do you think? Could you simply deactivate this and drag it up like that? What do you think? Now, why would it be okay to do that? Couple of reasons. First of all you're getting is just a little bit of a deeper retracement within the overall downtrending move. So we're trading in the direction of the trend, which is down. So number one, check in our favor, right? Number two, let's say hypothetically that you reboxed it up there and you get filled short, I don't know, in this bar right here. And it comes down and it checks the mid-band like this, and then all of a sudden, for some reason, you know, it doesn't get to your scalper target, and off of this bar right here, it starts to come back up. What can we do? And our initial 12 ticks short stop is sitting up here somewhere. I don't know, up here somewhere. What do? Moved a couple of bars in your favor. You're feeling pretty good. Oh, no, it's starting to come back past my entry. What am I going to do? You leave the 12 ticker way up where? We talked about this in the first part of the webinar. No, you drag it down. Drag it down right above that swing right there. Or if you're more fearful about getting taken out, take it down into here. That's what I'm trying to say, and this is, I'm going to conclude with this, is that clearly the object trader for us, for all traders who use the tool, it's made life a lot easier because it's sort of semi-automated a lot of the decision making once you put the box or the ray or whatever tool you're using on the chart and the trade is filled and the targets and stops are in place. There is a certain sense of accomplishment. There's a good feeling about it, depending on where you got filled and whether you're feeling heat or not, right? But the most important thing is that what I'm trying to impress upon everyone here and everyone listening to this recording, that a little bit of active management after your fill, and just don't sit back sort of and rest on your laurels. Hey, I got a good fill. Look, I'm making some money. You know, be a little more proactive in your management and watch what the bars are doing. And if it's called for, you can move the targets and stops around a little bit. I think if you start trying to do that, a little more active management of your trade once you're in, and not, you know, sort of sitting back and let OT do all the work, it's going to help you a lot. Everybody in here, seriously. You see from just these couple examples what difference it makes. Yeah, we should have put 2 lot on there, Greg. It would be interesting to see where Nazi goes. I wanted to do it. I should have just put a T1 and a T2 here with a 5 and a 10, and then just see if we, and then we'd be trailing the runner right now. If it popped up, I'd be taking the stop up to here, especially if it starts heading higher. Just crank that stop right behind it. Don't give it any wiggle room, because after hours, you don't know what could happen. Some news event could come out and just crater the whole thing. Mark says, I'm struggling with taking a short or long on the opposite side of the midband. Mark, we talked about that quite extensively. Have you had a chance to watch last Thursday and Saturday's webinars? Oh, you were there. Okay, well, we talk about that. We talk about, there, you just hit that top. You're probably going to get a pullback off of here. You know, for a lot of traders, I understand that. That's sort of a, what would be a good way to put that? A little bit of zone of confusion is, and I'll just quickly recap this before we wrap. What Mark is saying is this. Here's what he's saying. And I know a lot of you traders, I know everybody in here, a lot of you feel this way about this very topic. Is, let's say you're in a downtrend. Okay, it's coming down, however it's coming down. And it starts to retrace higher. It gets beyond this sort of comfort zone at the midband. Here we're all comfortable. We know, we put the box on, we wait for it to break, and we know how to manage that. Life is good. What becomes an issue is when the market starts to come higher in a downtrend, goes up into here, where we talked about reboxing it, or even further up into here. Everybody knows that this is called a phantom trade. When we go to the outermost band after the bot has been trending and it retraces up into the outermost band is called a phantom trade. So the way we teach this, in the textbook way of looking at it, is this is simply a deep probe on an overall move down. Now, there are exceptions to this. It's possible that this could be the beginning of a trend change, right? So the key then in looking at whether it's a trend change or not is after it does the deep retracement, where does it pull back to? If you are shorting up here because you believe it's an overall deep retracement in the overall downtrending move, well, then your target is where? Yeah, your target's down here at the mid-band. So if you are short and it gets down there, you're looking to cover some here because what could happen? What could happen on a rollover and it comes back down here? Yeah, it could bounce, and that could be the trend change. So here's what I want to say to be clear about this. I'm showing you the textbook way of how we teach this and how you can take it. Is it, if you are nervous about this type of trade, is this a trade you should take? These deep retracement phantom trades. If you are nervous about taking this type of trade, is this a trade you should take? Yes or no? If you're nervous about it, if you can't really see it that well, it makes you feel a lot of fear up in here. You think you're going to get filled short and the thing's going to whip right in your face and full stop out. Then do you need to take it? Is this the type of trade you should be taking? If you feel that way about it, and maybe you've been nipped on a couple and took some losses, no, don't take it. Another trade will be coming along, so you miss a phantom trade. Maybe the phantom worked out, maybe it didn't. You don't have to take every trade that comes along. Sometimes you'll see them, sometimes you won't. Some trades you're going to feel differently about than others, right? You're not only going to feel the same about every trade. Every trade is I feel good about, and I'll take all these opportunities that come along. No, you're going to develop a comfort zone, each and every one of you, for what you're comfortable with and what you're not. And what I'm suggesting is that you find the instrument that you like, find the trade entry type that you like, and then that's what you pull the triggers on. All right, I think that's a wrap. I'm turning off the